Welcome to this week's Jackson County Board of Commissioners meeting. This meeting is held in the Jackson County Courthouse Auditorium at 10 South Oakdale in Medford. This meeting is held every Wednesday morning at 9:30, as long as a quorum of 2 commissioners is available to conduct the business of Jackson County. Your Jackson County Commissioners broadcast this meeting over Rogue Valley Television, and it's available for streaming and review at jacksoncountyor.gov. Under the Government tab, under Recorded Meetings, click on RVTV Live Streaming. The types of business that occur at this meeting include public hearings, official voting on actions by the Board of Commissioners, presentations by departments of the county, and recognition of service that makes our county great. Agendas of the meetings are posted on the Commissioners' Bulletin Board and released on the county's website and through local media in the time required for public notice. Many of the conclusions on the business presented to the Board of Commissioners have been discussed in detail and prepared by the administrative office and staff prior to consideration at this meeting and the official vote. These prior discussions also have been properly noticed and the work done in a transparent manner. We encourage you to come and experience the process by attending any of these meetings or watch online at jacksoncountyor.gov. And now, your Jackson County Commissioners, Randy Sparacino, Rick Dyer, and Colleen Roberts, working for you.
Okay, good morning again. It's a little after 9:30, so we're going to call the Board of Commissioners regular meeting to order for January 28th, 2026. We're again here live in the Courthouse Auditorium and on audio-video conference. We're going to start today's meeting with the Pledge of Allegiance, so please stand. I pledge allegiance
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. All right, well, we have our special presentation, which is our annual financial statement audit. And we have Amanda McCleary Moore from Baker Tilly, U.S. LLP, here to give us our report. Thank you for being here. Take it away.
Well, thanks for having me here today. I'm Amanda Moore, a principal with Baker Tilly, and here today to present on the audit results of the 2025 audit of the county. Where do I point this? There we go. Okay, so for our agenda today, we'll go over the services that we provide to the county to remind you of what we do as part of our audit process. We'll talk about some of the significant audit areas. Won't go into a lot of detail there, but we'll at least want to give you a high-level information about what we do when we're here performing the audit. Of course, we'll go over our audit opinions and results, as well as some additional communications to those charged with governance. Under our auditing standards, we issue a number of reports with our audit, but there are some additional communications that we provide as part of our audit process, so we'll go through those. We'll highlight a few of the county statistics over the past 4 to 5 years, and then close with some of the new accounting standards that your finance team has to deal with as part of putting together your annual comprehensive financial report. So here's the services that we provide to the county. So the first one is that we audit the financial statements of the county, so your annual comprehensive financial report under generally accepted auditing standards, as well as the generally accepted governmental auditing standards. In addition to auditing the county's financial statements, we also audit the financial statements of the 4-H Service Extension District, as well as the Enhanced Law Enforcement District. In addition to that, you do have the White City Lighting District, and we perform what is called an agreed-upon procedures over for that entity, which is a little bit different than an audit. The state has a number of procedures that we perform and issue a report with our results in that report. The second bullet point there is that you do provide an annual comprehensive financial report. So this is a little bit different than a standard financial statements. You do submit your financial statements annually to obtain the GFOA Certificate of Excellence. In doing that, it does require that you not only follow your accounting standards, which are the GASB standards, and putting together that financial statement document, you also need to include statistical information as well as an introductory section, which includes your transmittal letter and those some additional items in order to submit that. So we do not only review that your financial statements are in adherence with those GASB standards, but we also do make sure that we're reviewing it for those additional requirements that GFOA implements so that you can continue to receive that award. The third bullet point there, because you are an Oregon municipality, Oregon has a number of audit requirements that we have to perform as auditors. So we end up issuing an additional report as a result of that. Some of those compliance requirements are related to your contracting rules. We spend quite a bit of time over your following all of the budget laws. So there's a number of items that we're required to test under those standards. The fourth one is that we perform a single audit under the uniform guidance. This is because you expend well over $750,000 in federal awards, and that requires that you have this additional audit. In the current year, we audited one program, and just a note there that I don't have in this presentation, that threshold of $750,000 will increase this next year. However, unfortunately, that's not going to alleviate this audit for the county. The fifth bullet point there is you do receive passenger facility charges, so we do have to follow the passenger facility charge audit guide and issue a report over compliance with adhering to the FAA standards for those charges. And the last one, as part of our services, we are, of course, responsible for reporting to you. We do that in a number of ways. We issue our audit reports, which are included within the ACFR, your annual comprehensive financial report, as well as to present to you today. So when we're out completing the audit, these are some of the areas where we spend a significant amount of time. This is by no means all of the areas that we look at as part of our audit, but these are all areas that have a significant balances, involve significant estimates, or have certain level of complexity to them. That is an area where we spend some additional time. A couple of things I'll highlight on here. For accrued liabilities, you do participate in Oregon PERS, and that does require that you have a number of additional accounts that get recorded in the financial statements. PERS hires an actuary, they provide you with those estimates, but management still does have to take those numbers and allocate them within certain funds as well as within your functions. And so we do look to make sure that those balances agree and that those allocations are consistent year over year. I'll probably talk about this a couple times, but you did have to implement a new accounting standard this year, so that's why you see compensated absences on there. It is a new accounting standard had to be implemented, as well as it does involve management estimate. So it is an area where we spent a little more focus this year than we have in the past. Under that new accounting standard, under the old standard, you only had to consider leave that was expected to be paid out to employees, so typically your vacation type policies. Under the new accounting standard, you had to consider all types of leave and not just whether or not that those would be paid out in cash, whether they were going to be used and whether it was more likely than not that you would have to, that an employee would use that balance. And so it did involve an adjustment. And like I said, probably talk about that a couple times today because that was probably the major change over the year. Grants, so we spend quite a bit of time looking at grant reporting because it, of course, impacts your single audit. There are different levels of cutoff, so that means what period you're going to record the revenue in, so it might be a little different for your governmental funds than it is for your enterprise funds, and then your budgetary balances. So we do spend a lot of time looking at making sure that revenue has proper cutoff there. As I mentioned, the Oregon minimum standards do require that we perform a number of procedures. We test procurement, gas tax, how the county is investing their funds under the Oregon revised statutes. There are a number of limitations on what you can invest in. We look at, and we spend quite a bit of time looking at compliance with the budget laws as part of that process. The last thing I want to mention is internal controls in the IT environment. It is something that we do take into consideration as part of our audit. We do look at internal controls over your IT environment, so essentially looking at security and access over your systems, as well as looking at internal controls. So we do some walkthroughs over internal controls, as well as do some testing. However, as part of that process, it's really used to help design our audit rather than issue an opinion over the effectiveness of those internal controls. But it is something that we look at as part of our audit. So as a result of our audit, we issue 5 reports. So these are the overall conclusions of our audit for the year. The first one is over your financial statements, and our responsibility is to express an opinion of whether the financial statements are presented fairly and materially correct in accordance with the GASB standards, the generally accepted accounting standards that the county follows there. And you can see that based on all of that test work that we performed, we were able to issue a clean or unmodified opinion. So overall, great news there. The Oregon minimum standards report, you can see on the slide there, we have no reportable findings. So this means 2 things. One, the Oregon report reports on internal controls. So as part of our process, I mentioned that we do evaluate internal controls as part of our audit process. And while we don't express an opinion, if we were to identify some sort of control deficiency, which essentially means an error could slip through the cracks, and we need to evaluate that and says, what does this mean to the county? If we reported some sort of significant deficiency where we thought some significant error could slip through or a material error could slip through, it would be reported in this report, as well as any compliance finding under those the Oregon minimum audit standards. So a lot of times we report on expenditures over appropriations or those types of findings. And you can see on the slide there, in your Oregon minimum audit standards report, we had no reportable findings. The governmental auditing standards report is actually very similar to the Oregon report. That is another report where if we were to identify a significant deficiency or material weakness in internal controls over financial reporting, it'd be communicated in that report, and you can see that there are no reportable findings in the current year. The 4th report, which we only issued this week, and I'll highlight that a little bit more when we talk about some additional communications in the next few slides, is we audited in the current year, we audited the Coronavirus State and Local Fiscal Recovery Funds program. And as you can see on the slide there, we issued a clean or unmodified opinion over that program, and we had no reportable findings. So as part of this report, we do look at internal controls similar to how we do for a financial statement audit, but now we're looking at internal controls over compliance. And if we were to identify anything that was a significant deficiency or material weakness, it would be communicated in that report. You can see that's a clean report there. The 5th report is the passenger facility charge audit. So this one's a little bit similar to the uniform guidance report, where we're reporting over compliance and internal controls over compliance. You can see in this report this year, we did have 2 reportable findings. The first one, it was related to use of matching funds, and the other one was related to the amounts included in the reports. Want to highlight something there. Both of these instances of noncompliance were corrected by management. They were identified and corrected. However, because they did occur during the reporting period, we do still have to evaluate that. And when we're looking at internal controls, there was obviously some sort of detective control that was the county to be able to find and correct those, but we're looking for something to prevent errors from occurring there. So 2 findings there this year. So overall, really good results for the county here today. So I mentioned some additional communications as part of our audit process, and this one that we don't normally spend a lot of time on is related to the plan, scope, and timing of the audit. So we were able to issue all of our reports over the financial statements in the passenger facility charges audit by year end, which is your due date for the state. However, the single audit, as I mentioned, was just recently issued this week. That was related to the fact that this last year, the OMB issued the compliance supplement, which is the guidance that we follow as auditors, very late. It's normally issued in around the April-May timeframe. This year, it came out the very last week of November. So unfortunately, it impacted really all of my government audits this year. So where normally you're seeing your audit package as one with your single audit included in there, in the current year it's two separate packages because we still wanted to be able to meet that deadline for submitting the audit to the state by December, and then be able to finish up the single audit. It was just the timing of that and the stage we were at in the audit. It makes more sense to get the financial statement audit issued and then issue our audit on the single audit later. So a little bit of an unusual circumstance this year, no fault of management or your auditors. It was just really the delay in that compliance supplement that we cannot complete our audit until that comes out. And with that delay, it was delayed. So while we normally plan to get everything done by December, that one piece came in January. So for significant accounting policies, what we like to highlight here is if there's been any changes to your accounting policies from a prior year. And management did adopt 4 accounting standards this year. And so there were some changes to your significant accounting policies. Of those 4, probably the most significant that you would see an impact really is related to those compensated absences. So the policy was updated to include essentially that more likely than not that all types of leave will be used over the next reporting period. In addition, implementing that new accounting standard did have an additional impact to your financial statements, and we included a paragraph about this in our audit report. When you're implementing a new accounting standards, you sometimes have to restate beginning balances, and that was the case with compensated balances. So if you're looking at your statement of net position, you're going to see an adjustment there that's for the change in accounting policy there. So it did have an impact. We include a paragraph in our audit report around that, just to highlight the users of the financial statements that there was a change. It doesn't mean that there was an error that was corrected or anything along those natures. You adopted an accounting standard that required you restate, and you did that properly. The other accounting standards that were implemented, one of them was GASB 102, related to certain risk disclosures. This would not impact the face of your financial statements, but if there were some significant uncertainties about either constraints or contingencies, it requires some additional note disclosure. Those things are typically even more than material when recorded, and so the county didn't have anything to report for that. The new accounting standard was adopted. It did not change your financial statements. GASB 103 was implemented in the current year as well, and this did have an impact to your financial statements. If you look at your MD&A, your management discussion analysis, right at the beginning of your financial statements, and you compare to what that looked like in the prior year, the format of that statement really changed, and the requirements of how that is reported changed a little bit, and there's a lot of emphasis on explaining why there may be differences year over year. You were the first of my clients to implement that new accounting standard, and I have to say, when I read the MD&A, I really feel like it does streamline the reading of that. It's meant to reduce a lot of duplicative information where you're mentioning the same changes multiple times. So I really liked the way that it turned out. So it will be an example for my other clients as they start to adopt GASB 103 in the future. And then the last one is GASB 104 related to capital assets. And that one really was just a clarifying statement. So it didn't have a significant impact to the county financial statements, but did have some clarifying disclosures over capital assets and how those are reported. There was a lot of inconsistency with the adoption of the new accounting standards over the past few years related to leases as well as the subscription-based IT arrangements, and a lot of inconsistency in how those were included within the financial statements. And so this clarified that to have a little bit more consistency when you're looking at two different governments' financial statements. Both of those, GASB 103 and 104, those last two I talked about, both of those were early implemented by your team. So they went above and beyond what was required in the current year to, and early adoption is encouraged in the accounting standards. So those were the main changes for the current year. So the next bullet point there is on management judgment and accounting estimates. And this is just to highlight that within your financial statements, there are a number of balances included within there that involve management's judgment or some sort of accounting estimate. I talked a little bit about your PERS liability. That's a significant estimate. In addition to that, you also have an other post-employment benefit liability related to health insurance for retirees. That's another item that requires a significant estimate. The county hires an actuary, provides them with the information, and those are recorded in the statements. Another significant estimate would be your claims liability that's included, as well as lives on your capital assets. Audit adjustments made or passed. We don't have any to communicate. I'll highlight a little bit what those might be if you had them, but we don't have any audit adjustments that were provided to management or passed by management. So there's two different types there. The first one is if we identify an error in the financial statements that is material, which means that if not corrected, we would not be able to issue a clean opinion. Management would have to post that adjustment in order for us to obtain a clean opinion. When we run into those scenarios, we do make sure to communicate to the Board of Commissioners that this is something that occurred during the current year. Typically with that, you're probably going to see one of those significant deficiencies or material weaknesses as well if we're identifying material errors. And we did not have any material errors communicated to management. The second type of adjustment is an adjustment that's not material. So if we identified an error as part of our audit process and that error was not material, management could make the decision to not record that entry. And you might ask why somebody might not record that entry. Well, if you look at your ACFR, it's a very lengthy document, and making sure that when you're recording a correction, that it gets recorded throughout the financial statement so everything's consistent and articulate with each other can be a challenge, especially towards the end of an audit process. However, we didn't have any past adjustments that we are here to communicate to you today. Couple other bullet points. One, if management were to communicate with other accountants because they disagreed with us about some sort of audit procedure we were performing or implementation of a new accounting standard, and they went and found somebody else to talk to about that. The important thing that we would communicate to you is that we also met with them. We all had the same facts and circumstances, and this was the result. But we don't have anything to communicate there. We're not aware of management consulting with other accountants. And the last couple things are just to highlight a couple items. As part of our audit, we had no disagreements with management or difficulties in performing the audit. We worked a lot together with your finance team as well as your internal audit department, and everybody is very forthcoming with information, make it very easy for us to do our jobs, and really appreciate all the effort it goes into getting this audit done on time. Just wanted to highlight something that the county does. In addition to if anyone from the public was to go out and look at your very large ACFR document, there is a document on the Jackson County website. It's called the Popular Annual Financial Report. It's summarized. I think it's about 11 pages, and it really highlights all of the important information in the financial statements. And this is not something that all governments do, and as a result of putting this out there, you actually are one of few governments in Oregon that gets the Triple Crown Award from the GFOA. But just like to highlight that it's not something that's required. The county does provide this information, and it is out on the website. So now we're just going to talk a little bit about the numbers in the financial statements. I mentioned that the financial statements have some additional statistical information. So we're highlighting 4 or 5 years in these slides here, but if you go to the statistical information at the back of your ACFR, you'll see that there's actually 10 years of historical data. This is already as small as I'm willing to go, so we're kind of sticking to 4 years here, but there is 10 years worth of data, so it is valuable information when looking at the history of the changes and balances year over year. So this first slide is really looking at the county-wide revenues and what those have looked like over the past 4 years. So, and this is government-wide, so this is all of your revenues of the county as a whole, and on the full accrual basis. So when looking at these numbers, you'd be looking at your governmental activities statement, which is on the first few pages when you get to the financial statement pieces. And the first one is grants and contributions. So you can see that this has been relatively flat over the last 4 years. If you were actually to look back a little bit further, you can see that those numbers would be increased a little bit, directly a result of the COVID-19 and all the funding that came through the pandemic. So over the past 4 years, as you've been utilizing those funds, it's been relatively consistent. But if you looked back a little bit further, you could see where those revenues were added there. The next one is charges for services. So this includes all your charges for services over the years, or the past 4 years. And so these are charges that get charged to customers. So like at the airport or parks, those types of items that get charged. And you can see that there actually was a little bit of an increase over this last year, but overall kind of a flat number there, but clearly some increase over the past few years in 2025. So seeing a little uptick there. Property taxes, not surprising, pretty flat. Obviously, your ability to charge property taxes is limited, and so you can see that those are just the incremental increases there. Other revenue is kind of a catch-all. I would say the biggest component of other revenue really is your investment earnings. And you can see that 4 years ago, when there was some challenges in the market, it resulted in some negative revenue for that 1 year. But since then, there has been corrections over the past few years that have resulted in higher investment earnings and correction of those balances from that year. And then the last column is just really highlighting your total revenue, and you can see it's got a nice healthy incline there. So that's where your revenues are coming from. These are where your have your expenses. So these are the different functions when we talk about functions in the financial statements. And so really when you're looking at the functions of the county, you have your general government, community justice and safety, health and human services, transportation, and then you have a few other functions that for the sake of this slide we have combined into other government. And then your business type, so that's your airport, recreation, enterprise funds. So when you're looking at general government, probably the biggest component of your general government is public safety, and it's getting included in that number there. Pretty flat over the past 3 years. And for community justice and safety, you can see a small uptick there, probably for all of the other functions there. And you can see that they're really kind of aligning and matching with your revenues as they have inclined over the past 4 years. So this is net position. So this is looking at essentially the residual of your assets and liabilities. So if you were to take all the assets of the county, pay off all of your liabilities, this is what would be left, and this is where they are, what is allowed to be used for the county. So that first bar graph is total. So that's your total net position after you do that calculation. But the 3 bars next to it explain where those investments are. That first one, the largest of the net position, is your net investment in capital assets. And so this clearly is not funding that can be utilized to pay liabilities. This is held in investments that for the county. And you can see, and this is something we do like to see as when looking at financial statements, you can see over the past 5 years that pinkish reddish line has continued to go up a little bit. If you were not continuing to make investments in the county properties, you would actually see that decline because depreciation expense is going to decline that. Or if you incurred significant debt, that also is something that could decrease this line. So you can see that that's been relatively stable with a little bit of uptick over the past 5 years. That next bar line is your restricted funds. These means that while you may have cash investments, you are restricted to a very specific purpose. That means they cannot be used at the county's discretion. And then the last one is the unrestricted balance. And so this is the piece of the pie where the county has ability to influence the use of those investments. So that was the government-wide as a whole. So looking at the government as a whole. Some other interesting information is really looking at your general fund, because this is where the funds sit, where the county does have the most flexibility. So this first one is looking at your general fund balance over the past 5 years. And you can see that essentially where the last bar graph there is the fund balance, so the little gray one. So you can see that that's been inclining over time. And wanting to know how you got there are the first two lines. It's really the revenues and expenses of the general fund. And you can see that you can see that it's going up, but pretty stable there. But the general fund balance has been growing, and I know you have some plans for future use of some of those funds. So this is kind of the inverse of fund balance. So as part of your fund balance, this is the cash that sits in the general fund. And if you were to look at those two slides right next to each other, you can see that they're pretty consistent with each other there. And then this is looking at general fund as a percent of expenditures. This is something that is used to measure the health of your general fund. The GFOA provides a statistic that says you should have no less than about 16-17% of your expenditures in the general fund. And that's really to bridge the gap between July 1st and when you start receiving your property taxes for the year. And so that's kind of like the minimum threshold there. So you can see that the county has a pretty healthy general fund as part of current year expenditures. And then this is looking at debt. You can see these bars are continuing to go down year over year. The county hasn't incurred any new additional debt in this time period. So these are the result of continuing payments on the debt that's outstanding. And then when we talked about the general fund and the bulk of that is supported by your property taxes, this is just to highlight some information comparing the county in Southern Oregon to some counties in the north, and looking at your direct tax rate. And you can see that you're having to do the same services, because as we look at those in comparison with really a pretty low property tax rate. And so this is just to kind of highlight comparing to, I think it's really small, but I'm pretty sure it's Multnomah, Clackamas, and Washington counties, and what they're using as a direct property tax rate. And so just kind of highlight the differences between the different parts of Oregon there. I already talked about these, but these were the new accounting standards that your team adopted over the current year, and we talked about how they changed the financial statements. And the last one is a new accounting standard that just was issued within the last couple of weeks on subsequent events, and there will be some further requirements over evaluating subsequent events. what the GASB found in comparing a number of financial statements year over year, one of the hot topics was not really evaluating and getting subsequent events included in the financial statements. A lot of times you might see a government issue new debt subsequent to year end before the audit is issued. That should be disclosed in the notes. And when comparing year over year financial statements, the GASB was able to see that debt was clearly issued in that time period and not disclosed appropriately in the prior year's financial statements. Nothing that I am aware of that has impacted the county, but that's something that they did as based of their study, that they found that governments needed to make sure they're evaluating through the period where the audit report is released, and if there's anything to include in there, that it needs to be disclosed. And with that, of course, I'll open up for questions, but just want to say thank you for having me here today, and to your teams in finance and internal audit. They're a pleasure to work with and always get us the information we need to be able to do our jobs.
Thank you. Amanda, any questions?
I don't have any questions, but I just thank you. I think it just gives a real transparent picture for the people's money being used responsibly and adhering to the standards. I love hearing that we do early adoption and going above and beyond and our example to the other clients. I think that speaks highly of the work that our staff and administration do.
Any questions? I just had a couple, maybe questions, clarifications. As far as the reportable findings on the PFCs, the matching funds and the fund amount, the audit opinion is that the internal controls as far as detecting those issues worked well and the remedies worked well. It's just it took place, so there's a reportable finding is more or less the opinion.
Yeah, we still issue a clean opinion over the program, but so these are just internal control findings. So where there could be an improvement in internal control to keep those items from occurring. But like I said, they were corrected, but because they did occur during the audit period, we still thought it was important to communicate that those had occurred.
Amanda may not want to say it, but I'll tell you, essentially, when we have complex projects from multiple funding sources, we have limits on which funding source can fund what percentage of the project and how those funding streams can be used towards the project. We had created a spreadsheet that was simplified that process. We had an employee that didn't use the spreadsheet. We weren't able to figure out why they didn't use it. We later caught that they didn't use it. What we've done to correct it is update and train employees on the spreadsheet, and also set a check on the use of the spreadsheet when it's used before it's submitted, before we get to the detection. And that's the short version of it.
And I think it's worth mentioning too, as far as county debt, the only general obligation bond we have is the administrative of the ECSO bond. And then as far as the revenue bonds, those are airport bonds.
Airport, yeah.
Yeah, so again, I think it's kind of important distinctions to make, that there's, no general obligation bonds that a lot of other jurisdictions are having to rely on, and fortunately we've been able to not have to use those.
Right.
And I do just want to add to that, I believe the last GO bonds the county asked the public to pass were in for the juvenile detention facility, and we paid those off in 2007. So for specific county purposes, we have not asked the public to incur any GO bond debt since we paid those off, prior to us paying those off. But we also paid those off, I believe, 7 years early to the public. So
No, I think it's definitely important to mention that for people to understand. Again, the type of responsible pay-as-you-go approach that we do employ. And one other, it may not have gotten into this level of detail, but the charges for service decreased last year and then had an increase this year. How much of that is tied to things like increased real estate activity, recording fees, maybe the parks, the lakes being more full? Is that something we can make a connection to?
Yeah, I would say, I don't know if you have something, I don't know if I have something specifically related to that. We do audit that as part of our process. Obviously, we spend time looking at revenue and making sure it's recorded correctly, but off the top of my head, I don't have the analysis that we did there.
I don't have the analysis either, but I'll tell you that they're going to be associated with the big revenue generating items. She gave the example of an airport. Our airport had a record year of passenger use. We had a record number of landing fees. We had so you all approve those fees we charge for those items, and they bring in millions of dollars in revenue. And when we have huge passenger, that's just an example. So it's going to be the bigger things, not the smaller things.
Yeah, I assume that it just, because it decreased in '24 and increased in '25, and we still kind of had the same airport activity, although it's been increasing.
It's increased. It's a record year.
Yeah.
So last year was not a record year. We're still recovering from the COVID kind of holdback. That's just one example, though. It's the bigger items. Clerk and recording, for example, when we don't hit the budget target for the fund, we might have to fund that $500,000, as opposed to we're talking $6 and $7 million over in the airport area from fee generation. So the examples you gave, there were reductions in recordings and there were reductions in some, but those aren't big revenue generators as compared to something like the airport.
Makes sense. Okay, well, that's all I have. Again, always appreciate the report, and I certainly appreciate the results of the report, which is due, to a lot of the folks sitting here, audit and finance and administration, and all the department heads, again, and just their attention to detail and their adherence to all of the regulations that are onerous, but they're on top of them, and again, benefits the citizens of this county and our ability to provide the service that's needed. So thank you and appreciate it.
Do you think we'll ever have a year where there's not a new GASB requirement?
I don't know.
In my whole career, every year there's been at least one.
Yeah, no, the subsequent events isn't effective actually till 2027. So technically, if you don't early adopt it, you don't have one next year.
All right, any other questions before we?
I do feel like they've slowed down.
Well, again, appreciate the report and
Yeah.
appreciate the work.
All right.
Thank you very much.
Thank you.
All right, we'll move on now into a request for and discussion of non-agenda items. We have a 5-minute limit pursuant to the codified ordinances of Jackson County, section 213.06. Members of the public may address any item not on the agenda. However, pursuant to RS 192.640, the Board of Commissioners is prohibited from discussing a principal subject that is not on the agenda. Therefore, the Board of Commissioners will listen to your concerns and may consider the matter you raise by asking staff to follow up on any questions or by placing the matter on the agenda for discussion at a future meeting. We do have one individual signed up, and it looks like, is it Clarence Carr? Come on up and give your name and address for the record, please.
Clarence Carr, my address 1446 Thomas Road. I did want to put something on the agenda. I'm coming here underneath the Oregon Constitution, Article 1, Section 26, for redress. Since you guys are an autonomy governing body, you guys would be the one that I get to bring my redress to. Jackson County sheriffs have seized over 6 vehicles. They've towed over 10 to 12 vehicles, issued me all type of citations, all within the city of Medford. They do not have an internal government agreement with the city of Medford. All of my tickets were routed over to the Justice Court in Central Point, which is outside the territorial and boundaries of the city of Medford in violation of the OARs. When I went over there to see Judge Joe Charter, I have it recorded. I recorded the hearing. He told him they didn't have an IGA. It was in the wrong jurisdiction and the wrong venue. He still adjudicated the matter, and then he wrote failure to appear, criminal citations, sent it over to the Department of Motor Vehicle, and had my license seized on state offenses, which I've never had a criminal failure to appear. They're entered into the EIN, not EIN, sorry, I got so many different, I've been learning so much law, but it's entered into the LEDs, sorry about that, which, you know, this board is part of the federal agreements that they contract out with for these programs and these, you know, things to make sure that entries, like the lady before me, audits to make sure this stuff isn't being abused and used the wrong way. So that's one issue. Oh, and the tow truck companies. So they're charging me $650 on one. Another one is $760 some just for the first day for hooking the car up and taking it to the place, and $75 a day for storage fee on top. I've paid for numerous of these vehicles and got them out. I got the contracts. They're all void. Every one of these contracts, every one of the tow companies have abused the power and the contracts that you guys have signed with them. I have contacted the sheriffs and they refuse to contact me back. I had the same incident again. I wrote you guys an email and asked you guys to please stop it. It didn't stop. I was targeted 4 or 5 more times. 3, 4 more vehicles were seized. As you see, I don't go to jail. I might have been, you know, had my past, but I'm also here to ask you guys to audit those cases. One of my cases, I was out here. I first came here from Vegas. I won't tell you I was a good guy. I was born and raised in Vegas, so, you know, probably didn't land here, probably the best fella. And I went to a house party and I was assaulted by 18 white individuals. And in the production of that assault, I discharged the firearm twice at the ground to get them off of me. I jumped in the clearest vehicle next to me and they drove me home. Not some random place, they drove me home. I was later arrested, and Timothy Barnack, he did some messed up stuff with the charges and got it to where only I got locked up. Later on, they tried to get me for an assault where I could bring the information to you, and they used my mother as a tool to extort me out of a plea. I brought the case numbers, I brought everything that's here in the petition. And I'm asking this council to fix this. I'm not asking you guys to, you know, say, hey, this is a good guy. I'm just asking you to remedy the wrong. Oregon Constitution forbidded slavery, including institutional slavery. You guys run the juvenile department center over there. Sorry. Judge Bloom, he also issued fake protective orders, which Medford Police Department executed and seized my kids for 2 years. You guys have contracts with Title IVE and everything else. Those judges are restricted to their jurisdiction by the ordinance, and my records are restricted by Oregon revised statutes. They were fluctuated between both courts. Bloom, my case was dismissed by Gerke. Judge Bloom took it upon his own to have it stricken from the record and hid from me. Court clerks, Debbie Scales, and all of them, same issue. They're the ones hiding it, and now everybody refused to give me the record. I'm asking this council to please provide all those records as well and put this on the next agenda.
Thank you. All right. No one else signed up. Anyone else in the auditorium wishing to speak? No? Anyone online with their Zoom hand raised to speak?
Mr. Chair, I do not have anyone on Zoom with their hand raised.
All right, then we'll move on into the consent calendar, which today consists of minutes of meetings of the Board of Commissioners work session of January 6th, 2026, Board of Commissioners regular meeting, January 7th, 2026, the Board of Commissioners staff meeting of January 8th, 2026, and an order authorizing the chair of the Jackson County Board of Commissioners to execute an easement with the City of Medford by and through its Board of Water Commissioners. That's order number 46-26, and an order reappointing Kristen Mendovacalba. I think I got that. I know you had it phonetically spelled for me, and I still couldn't quite get it. Anyway, to the Public Health Advisory Board, and that's order number 47-26.
Move approval of the consent calendar as read.
I'll second.
Commissioner Sparacino?
Yes.
Commissioner Roberts?
Yes.
Commissioner Dyer?
Yes. Okay, no public hearings today. Next item is a discussion deliberation item, which is an order authorizing an exclusive negotiating agreement with Ecotech Composites LLC, and this is order number 48-26. Mr. Jordan.
Sorry, Mr. Chair, I was just distracted by the person who just said their driver's license was revoked, getting in a car out there and driving away. In this case, Jackson County has unimproved land located at the Rogue Valley International Medford Airport. Ecotech Composites LLC wants to negotiate a ground lease with the county for approximately 82,764 square feet on the northwest development to construct and maintain a hangar, manufacturing facility. This will be for aviation-related production. This is an agreement to negotiate a lease, not the actual lease, but it does tie the property up while that's occurring. In this case, the term of the agreement will be up on execution through 3 months. It's a revenue of $16,967, and I do recommend your approval.
Thank you. Any questions?
Yeah, I'll move to approve order 48-26.
Second?
Take a vote.
Commissioner Roberts?
Yes.
Commissioner Sparacino?
Yes.
Commissioner Dyer?
Yes. And that does conclude our business today, so we're adjourned.
We hope that you've enjoyed this week's Jackson County Board of Commissioners meeting. If you have any questions on any part of the show, please feel free to contact your Jackson County Commissioners or staff. You can find their contact information at jacksoncountyor.gov. To review the content of this or any other meeting, under the Government tab, under Recorded Meetings, click on RVTV Live Streaming.